Joining me now is Brendan Capstick from Nedbank Private Wealth to give us his take on markets activity. Brendan, thanks so much for your time this afternoon. So markets quite jittery today. Why the change in sentiment? It seemed like markets were shrugging off that U.S. government shutdown, but there is political developments keeping many on the edge of their seats in France, and gold slightly pulling back, but still holding above $3,900.
Yeah, good afternoon. Thanks for having me. Geopolitically, I think there is a lot going on. Of course, with the U.S. government, lockdown still, not decided. Of course, as well, this French political deadlock that we're seeing on that front. I mean, you've seen those European bond yields go out, and of course, the euro also weakening subsequently. Of course, leading into that stronger gold price touching that $4,000 mark. But I think all in all, it's also probably, just from yesterday's strong moves internationally in the US specifically. On the AMD OpenAI transaction, I think the markets were strong yesterday, so possibly just profit taking across the board and repositioning post a strong day yesterday in the US.
And let's get your analysis on that OpenAI deal. Of course, the ChatGPT owner sealing a deal with chipmaker AMD, a deal that could also see OpenAI even taking up a 10% stake in the chipmaker. What have you made of that partnership, and does it pose a threat to NVIDIA's AI dominance?
Yeah, it's a long list of deals that OpenAI has now done. I mean, if they're in a deal with NVIDIA, Broadcom, we can go on Samsung, and now with AMD. Effectively, OpenAI and Sam Altman has highlighted they need the computing power to deliver on these large language models across the board. So effectively, AMD has given OpenAI 10% of their market cap or their company in exchange for these chip targets or computing targets for AMD. So it was a positive for AMD. It was up nearly 23%. But I think the thing that the market is really trying to grapple, and the word AI bubble is being floated around on various commentators' lips, is that, is the circular nature, where's the revenue and earnings really going to come from at this point? So we're talking about big numbers. But I think at this point, if you look at the risk sentiment, it's still strong internationally. And I think at this point, fighting the Fed or even fighting the AI trade is a difficult one to explain if you look at where markets are moving.
And let's just maybe chat about investors awaiting fresh market catalysts. We have the Fed meeting towards the end of the month, but we also have the earnings season, U.S. earnings season kicking off next week with banks starting earnings season. What are your expectations? Will we start seeing the real impact of tariffs when it comes to those numbers, with those reciprocal tariffs being implemented during that quarter?
Yeah, good point. Because I mean there's been a lag on it. Initially, there was a front-loaded, inflated number, most likely, on a lot of these earnings updates. But I think the 2 points to what you're alluding to, especially on the tech side, you've got this big demand, and we'll see if the earnings are really coming through, efficiency are coming through on that front. So I think from that point of view, the Fed, I think the market is really pricing those rate cuts already, at least one, maybe two before the end of the year. So I think general consensus that the earnings will still be strong, but that could be another important factor when it comes to these big numbers that we're talking about in the AI space.
And are those numbers really strong? Because it's also been interesting to see a number of analysts really lowering their estimates for earnings, and we keep seeing these big companies topping earnings.
Yeah, I think that's the thing. I mean, it feels like there's a circular movement of capital between these companies. If you look at, as I mentioned, NVIDIA, Oracle, and OpenAI, but it really comes down to OpenAI, which is still not a listed company.
Yeah.
In that sense. So I think if you look at maybe broader, and I think that's where a lot of investors need to look at the US valuations, all these names I've mentioned are trading north of 30 times forward. The US market's now trading at 23 times. So they're not cheap. So any miss in some earnings updates will be negative in that front. I think what we are looking at is looking at some of the other Chinese markets or Chinese AI plays that can be more attractive as a valuation entry point.
And then let's bring it back home with Afrimat. They expect to report a strong half-year performance, pointing to an improvement in iron ore sales volumes and a turnaround that we are seeing at Lafarge. It seems to be bearing fruit. A big improvement from the last financial year, with markets liking the update. That share price, the last time I checked, was up 3%. And it seems like those that were betting on the management team could be reaping the rewards when those results are out.
Yes, I mean, it's some big numbers that we're talking here. EPS up guided between 90 and 95%. But again, they're benefiting from the improved synergies through that Lafarge acquisition and the quarries and the bulk commodities, specifically on the iron ore volumes, sales volumes, looking more attractive. So the share price is up nicely today, still down 44% on a year-to-date basis. So, good management team. I think the environment really is shaping up from a commodities point of view for them to benefit. So definitely one to look out for.
And then before we get into the stock picks segments, markets also liking Datatech's update. The last time I checked, that share price was up 8%. And this as the ICT firm expects earnings to double on the back of a strong showing from most of its divisions, that being Westcon and Logicalis. So is this a firm you watch closely, also poised to gain on the back of, services like cloud infrastructure as well as cybersecurity?
Correct. I think on our front, locally listed, it's not one we do all for clients, but a locally listed, not a lot of opportunity in the IT space.
Yeah.
A really interesting space, cybersecurity and cloud infrastructure, as you mentioned. Also, a lot of investors do miss this one. It is a rand edge share in our market, and it's done exceptionally well this year. So as you mentioned, a lot of the international, the Latin business, as well as the Westcon business, improving from a profitability point of view. So really not demanding multiple on it, still trading around 9 times forward. Really good business and a really strong update from their front.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
So here's a domestic global small cap. They really do punch above their weight and got some fantastic IP in raise bore drilling. They do things that no one else in the world does. And I think they're quite an interesting way to play this demand for commodities and particularly the green metals. So yeah, they've got a strong order book that's over $300 million with another project pipeline of about $500 million. Balance sheet looks in good nick, and they're really diversifying across not only commodities but geographies in serving these miners. So yeah, interesting little company and one to have a closer look at.
One of these listed holding companies, and frankly has a history of creating enormous shareholder value in the form of transactions or unbundlings over time. And this has been a total lag out of late. Just sort of peering through the looking glass, what we've been observing and what HCI are essentially communicating to the market is their strategic shareholder, the SA Clothing and Textiles Workers Union, has been in dire need of capital. Union membership is down, and they've essentially been selling down their HCI shares over time. And now, to alleviate this overhang, HCI have done a deal with them, essentially swapping shares in the company for a property portfolio, in addition to doing just an outright share buyback. Yes, diluting their holdings, some essentially halving their holding of HCI, but creating a heck of a lot of liquidity runway for them.
So local players HCI and Master Drilling picked on Stockwatch last night. Talk to me about what you like, or rather whether you like these counters. They are, the smaller players on the JSE.
Yeah, it's not too, terms we look at closely, a little bit small for us, but maybe I'll just have some thoughts on the two names. So Master Drilling is done exceptionally well. It's up 37%. So that's 2.3 billion rands market cap, so quite small. But again, benefiting from this resource and mining commodities improvement locally and internationally. So I think it's interesting business, a little bit small for us. And then on HEI, the investment holding company, of course, it's got a array of assets, interesting assets. The Socha assets are looking attractive to us. If you just look on a look-through basis, you saw what Sunbet did with the online business, and I think that asset's still within HEI that's down 20% on a year-to-date basis. Could be interesting entry point to a discount of various names such as Frontier, Sun and Sun, and of course those Africa Energy assets. So a little illiquid on our front, not something we would look at, but I like the discount that it's trading at, and maybe if there's upside to the energy assets over time, it could be a unlock.
All right, let's get into your stock pick. Where are you seeing opportunity at the moment, Brendan?
Yeah, we're picking Naspers, a locally listed industrial, of course, just coming off the back of that 5-to-1 share split. That settled, of course, this week. On that front, I think Naspers is still trading at a 40% discount to net asset value. And Tencent is still doing exceptionally well with the gaming business really trading strong on that front. And I think, as I mentioned, on the Chinese side, Chinese tech and AI efficiency is really coming through on that market. So something to look out for on that front. On that score as well, we think the valuation is still in favor of Naspers if you look at it trading on a historic discount between Naspers and Prosus. And of course, they've announced that they will continue to be buying back shares of Naspers and Prosus. So I think it's a good name to be invested at these current levels.
All right, let's leave it there. Brendan, thanks so much for your time and taking us through trade at midday. Now, that was Brendan Capstick from Nedbank Private Wealth.